Recent breakouts, particularly in March, have confirmed this trend, showing strong momentum and a clear upward trajectory in price. The next leg of this rally, I'm paraphrasing him, but the number is his number. The next leg of this rally could propel gold towards the 3,000 mark relatively quickly before it encounters any significant resistance. It's a steady as she goes situation, and silver could start taking the lead higher in the next leg. So there you go.
In a recent analysis, VinceLanci, a renowned commodities trading expert, illuminates the current strength of the gold market. Lanci's insights and broader market trends paint a bullish picture for both gold and silver. According to Lanci, recent breakouts in March have solidified a strong upward trend in gold prices. He cites fellow analyst Michael's prediction that gold could soon approach the $3,000 mark before encountering significant resistance. This aligns with international gold price movements, which have seen a remarkable 23% increase this year. Market forecasts suggest gold could reach $2,700 by year-end, with projections for 2025 ranging between $2,800 and $3,200, and a 5-year outlook of $3,300. Silver is not lagging in these precious metals rallies. Lanci expects silver to lead the next phase of the upward movement. This prediction gains credence from recent market activity, where silver prices have surged 2.7% to $30.39 per ounce, breaking through a crucial $30 resistance level. While silver briefly touched this price point in 2021, maintaining it has been challenging for over a decade. Lanci notes a recurring pattern where the market hits new highs, but a mystery seller causes a dip. He suggests considering a long position above $2,481, with a recommended $31 stop loss for bullish positions at the current price of $2,511. These interconnected developments in gold and silver markets suggest a potential shift in the precious metals landscape. As global economic uncertainties persist, investors appear to be turning to these traditional safe haven assets, driving prices to multi-year highs and potentially setting the stage for further gains soon. Before diving deep into this topic, subscribe to our channel, hit the bell icon for updates, and share this content with anyone who might benefit from it.
According to MSA's Michael Oliver update in his most recent 360 report sent on Sunday, all key long-term buy signals for gold have been triggered, marking a significant continuation of the bull trend that began with the initial buy signal in 2016. We have a chart showing some of the concepts he's talking about there. Recent breakouts, particularly in March, have confirmed this trend, showing strong momentum and a clear upward trajectory in price. The next leg of this rally, I'm paraphrasing him, but the number is his number. The next leg of this rally could propel gold towards the 3,000 mark relatively quickly before it encounters any significant resistance. Now, we have more commentary on that at the bottom in the premium section. So there's also an update on silver with regards to the 2010-2011 analog. And I'll just share with you that it's a steady as she goes situation, and silver could start taking the lead higher in the next leg. So there you go. I think his phrase used was silver is the wild dog on the leash held by gold, and it's about to cut loose again. So steady as she goes in silver. Moving forward, data on deck today is the Case-Shiller Home Price Index. It will probably be heavily watched. We're looking at economic data right now, and there at the bottom you can see more of our commentary about the gold market from MSA. All right, let's go to some intraday analysis. Let's hide this stuff here, right? So the daily chart, I'll tell you a little story, right? All right, so here we go. We have the run-up. On Friday, Powell does his speech. Everyone says, great, he's going to ease. Market runs up. Market makes a new high. The mystery seller comes in again. I know it doesn't have to be mystery seller, but I'm telling you that it is. The mystery seller keeps a lid on it. The market waits and says, oh, geez, this is going to go down again, right? And it goes down again, and someone again catches the knife. Remember, mystery seller goes down, catches the knife over a longer time frame. Mystery seller goes down, stabilizes, down again, right? There's no real help here, right? The point is the market caps, ranges, caps, ranges, caps, backs off and ranges, caps, backs off, but gets bought. So I would say this, excuse me, above 2481 basis spot, you should just be long if you have that kind of a tolerance, right? So we're trading at 2511. If you can risk, this is not advice, if you can personally risk in your heart $31, then that's where your stop loss should be, and you should be long. If, on the other hand, you are bearish and you can risk, what's the high there? 25.31, you can risk $20. You should be bearish and you risk the $20 above. My comment is this. The risk reward seems like we're at the higher end of a $50 range, and therefore I'd be more inclined to be bearish. However, the macro momentum tells me there's just no way this is over.
VinceLanci draws a striking comparison between today and the end of the Nixon administration. We currently face ongoing inflation, less severe than in the past but still persistent, and potential insolvency issues reminiscent of New York City's bankruptcy under President Ford and widespread government distrust. Analysts project a 2.5% year-over-year increase in July inflation. The Federal Reserve, responding to inflation at a 4-decade high, has raised interest rates to their highest level in 22 years, aiming to bring inflation down to its 2% target. Since early 2022, inflation has been the Federal Reserve's top concern, with the Federal Open Market Committee implementing significant monetary policy adjustments. In July 2023, the Fed raised its target federal funds interest rate for the 11th time since March 2022. Let's get back to the video.
Mark Zuckerberg just admitted 3 things yesterday. Number 1, the Biden-Harris administration pressured Facebook to censor Americans, right? Number 2, Facebook censored Americans. They did it. And number 3, Facebook throttled the Hunter Biden laptop story during Biden's campaign, Biden-Harris, if you will. The full text of that letter is in a post that we have called Bombshell Zuckerberg Admits Biden-Harris Pressured Facebook to Censor Content. And we have a very brief comment on it. Cannot overstate how significant this is on multiple levels, but I'll spare you my opinions on that right now. But I will say with regards to gold and what have you, there's a similarity to this between between now and the end of the Nixon administration. Not only were we dealing with inflation, which you could argue that we're not dealing with that right now, but we are. It hasn't gone away. We were also dealing with insolvency. That was New York City going bankrupt under Ford after Nixon. And we were dealing with a complete distrust of the government in the guise of the Watergate event being a moment that just consolidated everyone's fear of the abuse of government. We're in that situation again. And so between Nixon being impeached for Watergate, between the increasing monetization of debt, and between the solvency problems of cities, which is going to happen again, that's when gold ramped up over the next 4 years between 76 and 80. So keep that in mind. This is very relevant. This admission by Zuckerberg only makes the public more distrustful.
Significant shifts and adjustments mark the current economic landscape. The Federal Reserve's aggressive interest rate hikes, designed to address economic pressures, have intensified investor interest in gold and silver. Experts forecast that gold prices may continue to climb, potentially nearing $3,000, while silver is anticipated to drive the next phase of this upward trend. As the Fed implements its policy changes, all eyes are on how these will affect gold and silver markets and overall financial stability. What are your thoughts on the future of gold and silver? Share your predictions in the comments below. If you find this video insightful, like and subscribe to our channel for more updates. Stay tuned for our next video to explore the latest market trends in greater depth. Until then, take care and see you soon.